All right, so welcome back to NoteExpo. I am Brian Luachner with the teaching team of Note School, and I am here joined with Wendy Sweet with Carolina Capital Management. So welcome to the NoteExpo, Wendy.
Thank you so much for having me. I've been in person. I don't get to be in person this time.
That's right. Yeah, we're doing something a little bit different. So kind of share a little bit with the group here. Tell us a little bit about, who you are. Tell us a little bit about your background, your experience, and we'll kind of dig into it.
Sure. I am a hard money lender. We lend short-term loans to investors who fix and flip properties. Some of them are buy and hold, but most of them are short-term fix and flip. We do bridge loans for apartments and things like that. But I really come from, people say, are you really in the note business? I don't think of myself in the note business, but I create them every day. So I guess I'm as much in the note business as you can possibly be. I love this business. I love the lending side of business. And I think I've always said it's the best seat at the table. And I'll say that till the day I die.
I like it. So how did you, how did you get to the spot to where you decided the note business was kind of the direction you wanted to go? Like, how did you end up being a hard money lender?
Well, actually, it was kind of an accident. Back in 2001, I had a mortgage company, and I call myself a recovering mortgage broker. Because in 2007, life changed. But in 2001, as the mortgage company, what we did is we concentrated mostly on investor loans. So I really got to learn about investing from the lending side, real estate investing from the lending side. I knew it was the most difficult to learn because mortgage brokers want the low-hanging fruit. So I figured if I could learn the hard way to do it, that I'd have, be shooting fish in a barrel. And it worked out really well that way. I was able to learn everything about conventional financing for investors. And it was really by accident. I would have a borrower who could qualify for a loan, but they weren't very good at finding houses. And then I had other borrowers who could not qualify, but they had money in the bank. So I started taking their money and lending it to the people who needed to borrow the money. So I really started brokering hard money at that point. I didn't even know that hard money was such a thing. It was like, oh, look, there's a whole business of people doing this. And it just grew from there. When I started doing hard money, I didn't have a dime to my name. It was all leveraging other people's money. In fact, to the point where we got $23 million of other people's money.
Incredible. So what was kind of the draw? I mean, you have the traditional mortgage side of the business, and that's, a very conventional way of thinking. It's very regulated and standardized, I would say. And then you've got this kind of more creative space that you're in. What kind of was that shift that you said, let's kind of go all in on this, this happy accident, we'll call it, of hard money lending?
Well, 2007 and 2008 took care of a lot of that because you couldn't get a conventional loan closed to save your life. But real estate investing was still alive and well. And there was still money out there. It just wasn't on Wall Street anymore. So it was really the only way to go at this point. When you're lending money to investors, when I'm lending money to investors, the first thing is it's short term. I love short term because I can turn it on a dime. In 6 months, I can read what's going on in the market. I know what's going on with values and things like that. And I can change my rate, my loan to value, everything that I do. I can change that in the next few loans. In 6 months, I'm completely different from where I was before. So it's just a great way to be able to make that change that's going on in the market. And it's really come in handy with all the things that are going on now with, COVID and which I'm a great supporter of now. I'm on day 12 of my COVID disease. But it's there, and it also depends on, the different areas of the country you're in, how all of those marketing things come in to play has to do with how you're going to lend, when you're going to lend, the pricing that you're going to lend at. As somebody who is not working for a bank, you get to think outside of the box. And you can decide, is this a good deal? Is this not a good deal? Is this a market I want to be in? Is this an investor that has enough experience that I want to be working with? It's just a great niche to be in.
Yeah, it's interesting because like the short-term piece that you really deal with allows you to be incredibly flexible. As the market shifts, you can shift. And that really starts to I think, take a lot of the risk off of the table for you. What was that like, when the market shifts? Anytime the market shifts, everybody has to kind of reevaluate what they're doing and say, all right, what do we think is going to happen? And then start to plan accordingly. What was that like for you in your business, kind of transitioning when the pandemic started? And kind of what business decisions did you know with your experience that you were going to need to make to lower your risk and obviously continue to grow?
Right. Well, one of the things I can give a lot of credit to is I'm involved in a lot of different masterminds, and I think it's important that everybody be involved in masterminds and events like this that keep you up with not only what's going on now, but what looks like it's coming down the pike. It's important to have wise counsel all around you when you're doing this business, and keep your ear to the ground on what could possibly be happening. So we actually had already begun to make a shift in January of 2019. We went from where our average loan size was well over 300,000, and we dropped that down to where now it's below 158. And we purposely did that because we really want to stay in what we feel like is a recession-resistant market. We know that in our area, the Southeast area where we lend, that if you're lending where the after repaired value of a house is about 350 or less, they're going to fly off the shelf. And that's also a good rental market for us as well. As a lender, the thing you're going to be thinking is, how long do I have to keep this house when I have to take it back? How long is it going to take me to get rid of it? That's how we all think as lenders, because we don't want the property. We want the loan. We want the note. We don't want the property. So we had actually started changing back in January of 2019. So we were already making that shift. And also in one of our recent meetings, we did it was really neat. It was an example or a lesson on what it would be if the newspaper ended up at your door that morning and every company in the nation had lost 50% of its value. We had to react and say, okay, what would our plan be? And we actually did that in January of 2020. And we came up with our plan, the employees that we would hang on to, how would we communicate to our borrowers and to our lenders, and all of the things that we would put into place if something like that happened. And guess what happened? In 30 days, that very thing took place. And we're like, wow. So it was really great because we just went right to it. Now, the changes that we made is we lowered our loan to value from 70% down to 65%, just to be in a little better position. We also used to do 100% of the purchase and the rehab amount, but now we do 90% of the purchase and 100% of the rehab. So we didn't change our interest rates. We felt like they were pretty good at where they were to begin with, which is at 3.5 points and 10.99% for us. So we didn't make any changes there, but we did tighten up how people could qualify. So we tightened up how they could qualify, and we had them bring a little bit more money to the table. We just wanted them to be a little more serious about what they're doing. And it actually turned out to be just such a blessing for us because it upgraded the quality of borrower we were working with. And didn't send anybody away, although 50% of our competition shut down. But it really, really increased the quality of our borrower, the quality of the homes that we were lending on. We were already thought we were doing great, but when we made that little tweak, it just made it that much better.
Wow, that's so incredible. There's so many little good things in there. I want to kind of touch on. The first thing is that obviously when the market shifts, you are impacted just like everybody else. The difference is your experience, your preparation, like that readiness really kind of reduce your risk because of kind of how you shifted things without having to suffer. Eddie Speed talks about all the time when market shifts, you see that some businesses, they go out of business. A lot of businesses go out of business because it's too tough. And then some businesses, they double in size, or Eddie is known for saying he'll double his net worth during certain market cycles. And so it's really fascinating. I think that that's really something everybody really needs to grab hold of, is that one, surrounding yourself with those like-minded people, those wise counsel that can help you in your business. Not just like right now, when I feel like so many people, they seek out that wise counsel when things are really tough. Like, oh man, I'm really struggling in business. Like, how do I, do this with my marketing or do this XYZ, right? But to kind of more prepare and say, look, even when things are good, let's start to prepare so that you can run almost like these hypothetical scenarios like you did, which is just, it's so fascinating to see how these people, I know you don't have a crystal ball, Wendy. Eddie has told me you don't have a crystal ball, but you do have so much experience that just like Eddie, you have a rear view mirror, right? You can see what's happened in the past and you know how to kind of prepare for that. And so it's a really interesting thing when you get to hear someone with such experience be so well prepared, because I don't think there's a lot of those stories right now in the marketplace for people who are ready for it. And so that's one thing. And then the other, I kind of want to transition because you have a very interesting thing that I want to talk about, in that, yes, you do have experience. Yes, you have a very successful company, but you've done a really great job of being in the note business, obviously, but you found a way to be in the note business and enjoy the kind of the life balance that comes with the note business, right? I've got a lot of investor friends who it's like a work-life balance wouldn't be possible with the scale of their rehab business, right? They aren't to that part of their business yet, I guess. And so share with us a little bit about, how the note business really kind of helped you to design the lifestyle that you wanted, as well as kind of allow you to have that balance in your life.
Well, one of the things that I think everyone in the note business needs to remember is that if you don't close that deal at that second, nobody's dying from it. We're not brain surgeons. And the rushing is not, it's not necessary in the note business at all. Especially if you're in the note business with other investors rather than mom and pop. And what I mean by mom and pop or owner occupied is what I should say. If you're in the owner occupied industry, there are people that are packed up sitting in the driveway ready to close. That doesn't happen in the investor world. It's, if it doesn't close by 3:00 today, 3:00 tomorrow is just fine. You don't have to, and nobody's dying from it. So you just don't have the rush. And I think one of the really important things is to not rush. That if somebody, has to have a loan closed by tomorrow, it's probably not something you would want to do. Let somebody else step up and take care of that. You don't have to cancel your plans and do what you had all set up to do to take care of this one thing. You write your own story when you're lending money. You can choose who you lend to, what you lend on, what the terms are. Everything about that loan depends on you, not the other way around. I have so many people that say, "Oh, I don't know that I can get that interest rate, or I don't know that I could get those points." I just don't know that I could find somebody that would pay that. You will, if you find the right people to work with. And it's not just the deal that you need to be concerned about who you're working or what you're working on. It's the character of the person that you're working with. And that's lifestyle wise, that's probably the best thing I love about this business is I don't have to work with anybody that I don't want to. That headache factor is not worth it. and when it comes to money, it brings out a different character for a lot of people. Ones that you think would be really easy to work with aren't, and vice versa. So, in my opinion, someone who's a good communicator, someone who has the same core values that I have, we pull a background check on people. Not only do we do a credit check, but we pull background. I want to see, we had one guy that had 22 seatbelt violations in a period of 3 years. And, how do you do that? You drive down the road going, hey, look at me, I have no seatbelt.
Yeah.
But
You get an award for it at that point.
That's right. He had a great credit score. He had plenty of money in the bank. And when we asked him, why do you have so many seatbelt violations? He said, I don't like following rules. Guess what? I got a few. So that's not somebody we would want to do business with. It's especially if you are a smaller lender, you have the ability to reach out to your circle of friends and find out as much information about the borrowers that you possibly can. I only, even lending all over the Southeast, we lend to people that we know, like, and trust. And I don't care how big or how small you are, that needs to be your concern. Who is it that you're getting into bed with? Not just what is it that you're lending on? Because I've had people where I've loaned money to, and it took them 7 years to get me paid back. And this is on a 6-month term or a 12-month term. It took 7 years, but they stayed in communication with me the whole time. They did everything they could to make sure that I got my payments. If it was going to be late, they let me know. That means so much more to me than really a credit score. That the communication, the willingness to pay, that character, you can't change somebody's character.
There's so much wisdom in that. And I thank you for sharing that, because I think so many people need to hear that it is not about, the beach on some island and the Lamborghini. And, we've all seen the YouTube and Facebook ads. We know what's pushed as far as lifestyle, but there is something that is so profound about this headache factor, right? I've worked with title companies who have a headache tax. They call it something a little bit different, but they say, look, if you're going to be a pain, there's going to be an extra fee on that closing statement. Like, that's how they view things. And it's because of, there is something to be said about, it doesn't matter how seamless things are, the headaches are really what causes the shift in your personal life, right? When you're bringing work home because you can't stop thinking about it, then your spouse or your kids or somebody is going to suffer because of that. And so from a work-life balance standpoint, I think that you've really hit on something that I want everyone to really consider, because the note business can bring that piece to it, right? The speed of the deal, like you said, is not the important factor, which, just being, transparent, when you think about our industry, especially if you started as a wholesaler or a rehabber, we've been kind of funneled into this thinking of, like, go into the house, talk to the seller, don't leave without getting a signed contract. Like, it's all about speed, close in 3 days. Like, it's all about speed. And this is such a different shift that can get the same results. And I think, a lot of people in the note business know you can get better results, but also bring what most of us want anyway, which is that, that more of that work-life balance. And a lot of people are shifted to notes simply because they wanted to get away from, the headaches that come with tenants or turnover or that kind of stuff, right? Not knocking on rentals or anything. I'm just saying that that's what caused a lot of people to kind of make this shift. And so I think it's really a really great piece of advice to kind of bring up. And that kind of brings me to one of the last things I want to talk about, which is, when you look at the market as a whole, do you see any areas that you feel like, look, this is something that I wish people would take more seriously, or this is something that newer people skip that they really shouldn't be skipping when it comes to either creating notes or really any aspect of the note business? What kind of advice would you give for people or to people about kind of trying to, get their business going or scale their business?
Well, I think probably the big gap that I see is diversity in what you're doing. I talk about that we're 6-month term or 12-month term, that we're very short term on the lending that we do. But being diverse in this business, I think, is really important. I think it's important to look at all of the options that are on the table. I love the short term. That's my bread and butter. But I also think it wouldn't hurt to have a 2, 3, 5-year note. I love the options of being able to sell partial notes off to get cash. There's so much of an option on any note that you can put into place. You can turn it into whatever you want to turn it into. You can take money on the front end, take money on the back end. There's just sell off the payments right in the middle. There's so many different things that you can do with that. I don't think you should rule out other options with what you're doing. I think you need to pick a niche with what you like, but don't rule out all the options. I think one of the biggest gaps that's going on right now is the 3 to 5 year buy and hold note. That demand is not being met. Wall Street isn't doing it anymore. Most every quasi hard money lender that was doing those longer term, they cut it off. They're starting to come back slowly, but they're not anywhere near what they were before COVID hit. And that's a market that is really hurting. You can get a good interest rate on it. To me, a good interest rate on something like that would be between 7 and 9% on a 3-year, 5-year note, something like that. That's out there. I do believe that will come back, and that those of us who are the smaller hard money lenders or private money lenders, that's a niche that we can fill with really good borrowers that have solid rental backgrounds, that it will cash flow at that type of an interest rate. You just need to help them get over the hump to where they can go back to a longer term bank, or a commercial lender that will do something like that. I think that's a pretty big gap that really needs to be filled. We're working on that ourselves to try and get something like that up and running.
That's a really interesting thing to point out. And everybody, you've heard the opportunity. But the 3 to 5 year gap is also interesting because a lot of people are struggling to refinance, right? Because they had a gap in employment or because of something to do with the pandemic. And obviously in 3 to 5 years, there's no reason that situation can't be turned around. Even if you just needed 2 more years of tax returns that were fresh to kind of reset things, it just shows you the opportunity that I think that's really in this space. So I really appreciate you obviously sharing that. And so let me kind of say this. I want to, there are people from all over the country here. There are people from every aspect, from the recovering landlords or the recovering wholesalers to the recovering, traditional mortgage lenders, up to, people buying hundreds of notes a year, right? Very experienced, seasoned investors. Is there anything that you'd like to share as far as here's a piece of advice or here's some encouragement for kind of what's to come in the note space?
Great. I've got some great advice. And it is, you will lose money doing this. You will. Just face the fact and understand that no matter what kind of due diligence you do on the borrower, on the property, on the market, there will come a time where you will lose some money doing this. It is not a failure. It is a great learning experience. And the worst thing that someone could do is get hung up on that fact that, oh, I lost money doing this, or spending a lot of time going after somebody that owes you money. I think a lot of people just get it stuck in their craw that they want that money back. They want that money back. I want that money back too. But how much energy are you spending going after that rather than building new clients and new deals and just moving forward with what you're doing? So don't have a fear of losing. You want to try and keep it as little as possible, but it's going to happen. I've lost money in the past, and I know I'll do it again in the future. I know that everything I do with the utmost character and integrity that I can possibly present to someone else. And I'm hoping and praying that they're going to treat me the same way. I appreciate all the people that I work with. I learn something from everybody I work with, everybody, whether they're brand new or whether they've been doing it forever. There's a nugget you can get from everybody that you work with. So if you lose money, don't let it get to you. Just move forward.
That is so, so good coming from an experienced person like yourself who also has figured out that work-life balance and knows to give up the headache for the opportunity that exists in the note space. So thank you so much, Wendy, for just taking some time to join us at NoteExpo. Everybody enjoy the rest of the day here at NoteExpo, and we'll keep moving forward. Thanks so much, Wendy.
Thank you.